LBR LBO Debrief.
Good morning, everyone. As you heard, my name is Paulius Kuncinas. I'm the managing editor at Oxford Business Group. We are an emerging markets publishing group focusing on growth economies. And indeed, thank you, Mr. Lakshman, for a very kind introduction. I have been based in Asia for the last almost 10 years and been following geopolitical trends. And I have to say, I stood here last year in Colombo feeling very confident. And I thought I knew the future. And I have to say I'm very humbled today. The only certainty that I have is uncertainty. And I think a lot of you here in this room will share the sentiment that the truth is we're in the midst of what I call a grand rotation, a certain search for a grand bargain, as superpowers are trying to reorder the post-Second World War order. And today I just want to share some of the highlights and try to, if you like, appreciate what it means for emerging markets, what it means for Sri Lanka specifically. So, without any doubt, what we have seen in the last year marks a turning point in terms of globalization. I think we all agree there's been an uprise in anti-establishment movement. We no longer care about the wealth creation. We no longer care about just the material values, GDP growth, all these things that we talked about in the 90s and early 2000s. We no longer care about the financial order. We care about social justice. And that has given rise to a whole new paradigm. Trump, in our view, he certainly has legitimized populism. In Europe, in the United States, in the Philippines, around the world, we have seen a rise of populism, which has thrown the old debate into a whole new paradigm. I think Brexit at the same time has legitimized nationalism. No longer are we talking about a world of integration, trade. We're talking about immigration, borders. We're talking about national interest. And the other big phenomenon which worries us is that the world has turned against immigration, against free movement of people. And that picture that you see there of Nigel Farage is very indicative. Brexit was never about exit from European Union. In our view, one of the greatest projects ever. Brexit was mostly about immigration, mostly about nationalism and fears of change of identity. And now, what do we see in 2017? We see Germany being the last defender of the liberal order, and Angela Merkel is the main leader of the free world. We see global order being reviewed. We're going to have a lot of trade negotiations. And this is the new reality that we have to come to terms with. Now, what are the implications for the emerging markets? Well, first of all, the first risk that we have to come to terms with is risk of protectionism. we can see that China is stepping up, which is a good news. China doesn't want to let trade go. It has invested a lot in emerging markets. It has invested a lot in advanced economies of Europe and United States. So we can see China emerging as a voice of reason. It is an opportunity for Asia to step up. You know, as Minister of Finance of Indonesia has said recently in Jakarta, it used to be the advanced world telling the emerging markets, please be reasonable and please suspend your emotions, please act rationally. Now it's the other way around. It's the emerging world, is the developing markets telling advanced economies and Europe and the United States, please be reasonable, please be rational. And I think it's a moment for Asia, especially Beijing and other nations in Southeast Asia, including Sri Lanka, to tell the United States, to tell Europe, look, we want to preserve this wealth creation. You know, it's not worth breaking up the order. We do think that TPPA can be salvaged, and it can be spearheaded by China. We do think that this is a moment for India to step up and to shine. And we have high hopes for UK. I know a lot of you here may be disappointed with UK's decision, but I think bilateralism is the new way of operating. I think multilateralism has failed, and I think UK is going to be once more a very active member of the trade community. Finally, we think that Asia is the next growth area. If you look around emerging markets, we have some issues in Latin America, we have issues in the Middle East, we have issues in Africa. But here in Asia, we have comfortably, we're looking at 5 to 7% growth. And I think this is a moment for Asia to shine and to fill in the void. Now, let's talk about the geopolitical shift and winners and losers in the grand rotation. Well, the good news is after a very long period of monetary easing, after Japan has been printing money, the Fed has been printing money, ECB has been printing money, finally we're coming to a point where we are saying, well, it's up to the governments again to take up the mantle. So fiscal expansion and fiscal stimulus is back in vogue. And I put it to you, that is good news. Because though I'm not a Keynesian, and I'm wary of governments spending money, I think in an environment where interest rates are so low, it is up to the sovereigns to invest more in infrastructure, in education, in health. So with that in mind, we welcome Mr. Trump and his new idea of spending $1 trillion on construction, infrastructure, upgrading airports, upgrading highways and infrastructure and energy sector. It also legitimizes fiscal stimulus in Europe, which we think will help to reflate the demand. If you look at the last 5 to 7 years, the main problem in Europe has been lack of demand. We've been stuck in this deflationary environment. And I think, honestly, that there is room for higher debt. There's room for certain countries, especially Germany, to borrow more and to spend more on infrastructure spending. The big risk, of course, is as I call it, mind the gap. If monetary policy stops and fiscal policy doesn't start, we have a gap of maybe 1 year where things could go wrong. Now, the focus next year should be on Europe, not United States, not Asia. I think Europe is the biggest elephant in the room. We are facing some fundamental existential challenges. Trump has triggered certain processes that are very difficult to unwind. People are afraid of immigration. People are afraid of social injustice. And nearly everyone loves to attack the establishment. So we have a very busy calendar in Europe. On December 4th, which is just a few days away, we have the Italian referendum. It looks like it's going to go against the current Prime Minister Renzi. And in April 2017, we have the French presidential election. There's a big battle to fight. It looks like the Prime Minister Fillon is going to take on Marine Le Pen, the populist candidate. Once again, the polls are telling us that Fillon can win, but we've learned not to trust the polls. So it's another major risk. In Germany, we have Angela Merkel fighting for the 4th term. We have European Central Bank and exit from monetary stimulus. We also have Brexit negotiations, and we have the Russian sanctions policy. So all in all, a very busy calendar, a lot of risks. And in the process, what could go wrong, what could go well? I mean, fundamentally, we would like to think that Europe can survive, and the fundamental consensus is still intact. But at the same time, we cannot dismiss the risk of euro monetary policy, euro currency union failing. We cannot dismiss of NATO alliance also unraveling. That's a big risk. And generally, we cannot dismiss of another recession in Eurozone. So if anything, for 2017, the big focus is on Eurozone. Now, what are the implications for Sri Lanka? Of course, the first thing that the positive message I want to get across is that in this environment of change and volatility, countries do well to continue to stick to the path of open economic policy, supporting their old allies, continue the reform, engaging in trade, and sound macroeconomic policy. I think this is a moment for emerging markets to differentiate themselves. I think Sri Lanka has already proven itself as an open economy, as liberal, open to investment. I think we can look forward to UK playing a much more active role of engaging in bilateral relationships, including here in India and Sri Lanka and China. We can expect China to play a much more positive role in terms of investment in trade. Even the United States, I think, can be much more active on bilateral level. Russia and the Gulf, everyone's looking to Asia to grow their economic potential. And therefore, you know, I'm actually quietly optimistic. I think 2017 will be a good year for emerging markets. The main factor that makes me optimistic is that United States is recovering. If we look at the middle class and private sector growth, the wages are up. We're looking at least 3% growth in the United States. And whether we like it or not, the US is still the economic powerhouse of the global world order. So, but finally, last but not least, there's a lot to look forward to in Asia. I think the old theme of decoupling, of Asia basically growing at its own pace, is now becoming a new reality. As the previous speaker already said, and the numbers already tell us, look at Myanmar, look at Vietnam, look at Indonesia, look at the Philippines. Anywhere we look, we're looking at least 6 to 7% growth. And this is growth not coming from external factors. These are domestic factors. This is private consumption. This is private investment. We're looking at companies investing in tourism, in agriculture, in services. So we've got a lot of diverse sources of growth. And this is what I hope that Sri Lanka will tap into. We are looking at a world that's going to become more regional, less global, but nonetheless, my hope is more stable and more sustainable. And though I must admit, uncertainty is the new word, that Asia has a chance to decouple in 2017. On this note, thank you.
LBR LBO Debrief.